Hey everyone, welcome back to Corporate Decoded, the place where we unpack the secrets hiding in plain sight within corporate filings. And today we're diving deep into MercadoLibre Inc.'s latest report. Let's just say there is a bit of a financial shuffle happening, and it involves a rather large sum of money being issued. Before we dive in, if you are all about getting the real story behind the numbers and cutting through the corporate jargon, make sure you are subscribed. And for those of you who love a good chat about finance and want to connect with like-minded folks, we've got a fantastic Discord community linked in the description below. So hop on over and join the conversation. Alright, so what we have here is a document called a Form 8. Think of this as a current report that companies have to file when something really important happens. Something investors absolutely need to know about right away, like a big deal or a significant change. And in this case, MercadoLibre Inc. is announcing that they've gotten into a material definitive agreement, a fancy way of saying a really important contract. The key date here is the 4th of December 2025, which is when the earliest event reported in this filing actually occurred. The report itself is dated the 5th of December, so they're pretty quick to get this information out. The company we are looking at is MercadoLibre Inc., a name that probably rings a bell if you are familiar with online commerce and payments in Latin America. They are incorporated in Delaware, which is a common place for big companies to set up their legal home base, and their tax identification number, their IRS employer identification number, is 98-0212,790. Now, MercadoLibre is a big player, and their stock, their common stock, trades on the Nasdaq Global Select Market under the ticker symbol MELI. They also have some other securities registered and traded on the Nasdaq, like their 2.375% sustainability notes due 2026, which trade under the symbol MELI26, and their 3.125% notes due 2031, symbol Mali 31. These are essentially different types of loans the company has taken out that investors can buy. Okay, so let's get to the juicy part. The reason for this filing, item 1.01 really spells it out. Entry into a material definitive agreement. On the 4th of December 2025, MercadoLibre, along with several of its subsidiaries, inked a deal. This deal is with some pretty serious financial institutions acting as underwriters, specifically Citigroup Global Markets Inc., Goldman Sachs and Company LLC, and JP Morgan Securities LLC. What did they agree to? The underwriters are going to purchase $750 million worth of what they call 4.900% notes due 2033. So think of it this way, MercadoLibre is basically borrowing $750 million from investors, and these notes are the official paperwork for that loan. The interest rate on this loan is 4.900%, and they have to pay it all back in 2033. This is a pretty significant amount of money. This offering is being made under their existing registration statement, which is a filing that allows them to offer debt securities from time to time without having to file a whole new prospectus for every single offering. The details of this underwriting agreement are pretty standard for this kind of deal. It includes things like promises from both sides that everything is accurate, agreements on how the sale will happen, and how they'll handle any potential issues, like indemnification, which means one party agrees to cover the losses of the other party under certain circumstances. It is all pretty technical, but the main point is that the deal is set and the money is on its way. Now, we move on to item 7.01, which is about Regulation FD disclosure. This regulation, which stands for Fair Disclosure, is all about making sure that when a company releases important information, it is made available to everyone at the same time, not just to a select few. So to comply with that, on the same day, the 4th of December 2025, MercadoLibre also put out a press release. This press release announced that they had priced these notes in a public offering. Pricing just means they've finalized the interest rate and the terms of the sale. It also mentions that a number of their subsidiaries are guaranteeing these notes, meaning they're also on the hook if MercadoLibre can't pay them back. This press release is included as an exhibit with this filing, so anyone can go and read it. The information in this particular section, item 7.01, is considered furnished rather than filed, which is a subtle legal distinction, but it basically means it is important information being provided, but it doesn't carry the same legal weight as a filed document for reporting purposes. And finally, item 9.01 lists the exhibits that are part of this filing. This is where you find the actual legal documents. Exhibit 1.1 is the underwriting agreement itself, the big contract we talked about earlier, detailing the terms for selling those $750 million in notes. Exhibit 99.1 is that press release we just discussed, announcing the details of the note offering. And then we get to the signatures. This is where the company officially confirms that all the information in the report is accurate to the best of their knowledge. We see the signature of Martin de los Santos, who holds the title of Chief Financial Officer. This tells us he is the one signing off on this important financial disclosure. He is the top finance person. confirming the company's actions. So what is the big story here? It is not about a change in their core business operations, like selling more widgets or acquiring a competitor. This is purely a financing event. MercadoLibre is raising a substantial amount of capital, $750 million to be exact, by issuing new debt. This indicates they likely have plans for expansion, investment, or perhaps to refinance existing debt. Raising money through debt is a common strategy for large companies to fund growth initiatives without diluting existing shareholders' ownership by issuing more stock. Looking at this from a strategic perspective, even though this filing doesn't contain detailed financial statements for the quarter, the act of issuing new debt signals confidence from the company and the market in their ability to handle more borrowing. The fact that they were able to secure this funding at a 4.900% interest rate means that investors see them as a relatively reliable borrower. This is especially interesting when you consider their existing debt, like the 3.125% notes due in 2031 and the 2.375% sustainability notes due in 2026. Issuing new debt at a higher rate suggests either that market interest rates have risen, or that this specific new debt has longer-term risks associated with it, or simply that this is the prevailing rate for new long-term debt. A key risk to watch for with any debt financing is the company's ability to service that debt. While the subsidiaries guaranteeing these notes provide an extra layer of security, ultimate responsibility lies with MercadoLibre. The world of e-commerce and digital payments is rapidly evolving, especially in Latin America, with increasing competition and potential economic fluctuations. These factors could impact their revenue streams and consequently their ability to meet their debt obligations. However, on the flip side, this inflow of capital could fuel innovation, expand their reach into new markets, allowing them to better navigate these competitive and economic challenges. In conclusion, MercadoLibre is strategically using debt to fund its future. The $750 million note issuance is a clear signal of their intent to grow and invest. While the debt itself isn't a surprise for a company of this stature, the amount and the terms are significant. We'll be keeping a close eye on how they deploy this capital and how it impacts their financial performance in the coming quarters. Alright, that is our breakdown of MercadoLibre's recent filing. What is your take on this debt issuance? Do you think it is a smart move for their future growth? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button, as it really helps us out, and most importantly, subscribe to Corporate Decoder for more insightful analyses like this. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.